Hello people. Welcome to a new ET Capital video. So today I'm going to be talking about trading the news. Okay, so scalping around news events. And in particular, I'm going to be talking about CPI that happened last Thursday the 10th of November at 8:30 a.m. New York time. Okay? So I'm going to show you two strategies around how you can trade news, and these strategies work best at high volume news, those really impactful economic reports, right? So when I say news, I'm talking about economic reports. So I'm really referring to economic reports. So you can use a tool like Forex Factory, right? And Forex Factory here details essentially all the major news releases for a given week, right? So on the Thursday, the 10th of November here, you can see we had CPI data at 8:30 a.m. New York time. It's red folder news. If you don't know anything about fundamentals, at least you should know something about CPI. CPI data is basically the core reading for inflation, right? And yeah, essentially, you really, if you're going to be trading, you should know the basics, right? You should absolutely know the basics, and you should know some of the core economic news releases for a given period. And CPI is a critical economic report, in particular in the current times of high inflation, right? So this is a number that everybody is watching to see, is inflation continuing to increase? Is it beginning to slow down? And what that economic release will then tell people is what will be happening with the interest rates. Okay? Anyways, that is perhaps for another day. What I'm going to be talking about is how to use these news events and how to trade and scalp these news events, right? And there's really two strategies that I'm going to talk about. So strategy number one is the buy limit, sell limit strategy. Okay. Now, this is a strategy that I've seen a lot of other traders use. I've seen it written in a book before, and it is an interesting strategy that I think can 100%, without doubt, I've seen it work. I've traded before and it has worked, but it does come with a lot of risk. And I would say that for me, in my opinion, I don't trade it. I don't trade it anymore, and it's not the move for me. I have a strategy that I love to employ that I think is absolutely great, and the buy stop, sell stop strategy, for me is just not the ideal way to trade news, and I'll get into reasons why. But first, I will show you how to use it. Okay, so we can see here I'm on rewind mode on TradingView, and I'm at 825 on the 5-minute chart on gold against the US dollar. Okay, this is primarily what I trade. Right, so I come to the chart, it's 8:30, and you can see where price is, right? Price is just at this high over here, okay? Now, what we're expecting with CPI is it's a very, a very big economic report, right? So we're going to expect a lot of volume, a lot of volatility, and the whole premise of this strategy is that we expect price to shoot in one direction or shoot in the other direction, right? So for that reason, we place a buy limit above price, a buy stop above price and a sell stop below price, with anticipation that price is going to go straight through one of them, continue to our take profit, and that'll be that, right? So I'll give you an example. In this instance, we're here 5 minutes before news, and I would put my buy stop, somewhere around here, and I would put my sell stop somewhere around here. Okay, so I'm just gonna put that in. So sell stop, and buy stop. Okay, so I've got my sell stop here and I've got my buy stop right here. Okay, now you might be asking, why not put your sell stop here and your buy stop here? for example. And you could do, but most likely if you do that, you're going to get wicked out. You're going to get basically both positions are most likely going to get entered due to spread. At high volume, high volatility news events, spreads increase. Okay, so if I was to put my buy stop right over here, right by price, you're going to get triggered in probably before the news event, and it's just not really what you want. If you're going to have both here, they might both get entered, and then price can shoot off. It's going to be a mess, right? So you want to have it a little bit away, right? Maybe 5-10 pips away from where price is, maybe even more. So in this instance, price is here. This is 25 pips, so maybe around 20 pips, right? So we can bring this a little bit closer. Okay, and I've just got here price below this low because I'm expecting it to take this low out and just continue down, or basically take out this high and just continue through and just blast off, right? So we'll see what happens. And if you were following CPI, you know that price basically just went on a strong rally on gold, right? And it did this across pretty much all equities. And the reason for this was a very positive inflation reading, okay? So as you can see here, in this instance, the buy stop would have got activated, and you most likely would have got a lot of profit, right? So say you would have put your buy entry here, I would have put my stop loss at the other side, so at the sell stop. That's where my stop loss would have been. And then I'm going to go for, let's say, a 1 to 1.7 here, whatever you're going to go for, right? So you could even just go for a 1 to 1. You could do the next higher time frame level, so you could go into the 1 hour and you could pick a higher time frame level. So maybe you could say, look, that high, once price takes that high out, or fills the wick, I'm going to basically have my TP there. And in this instance, you would have won that trade, right? So, and this is a perfect instance for this trade. It's a perfect example because the sell stop would not have got activated, the buy stop would have got activated, and price would have went straight to your take profit. So in this instance, it's absolutely great. But there is some major caveats with this strategy, right? And the caveat is one that I already mentioned. Number one, spreads, okay? You're going to have to deal with spreads because if there's extremely high spread, you could get wicked into one position, wicked into the other, and then it could be a total mess, okay? The other issue is that imagine price does something like this. Imagine price enters you in and high volume time and then just goes like that, okay? That's totally valid. That could easily happen, right? So if you don't have your stop loss in, this could happen to you in seconds, in seconds, okay? And once again, with high spread, the issue is that you can get wicked in, price comes up, maybe your entry, because of spread, ends up being up here, and because of the high volume, the quick burst down, and once again, because of the spread, you might only end up getting out around here because of spread, because of high volume, because of slippage, right? And it can basically, it can cause a lot of damage, right? And that is why I personally opt not to trade this style, because too much can go wrong. And that is the problem with this strategy. And I think slippage can even get worse than this, right? I've seen slippage get worse than this, where say somebody has, forget the sell stop for now. Someone has their buy stop right here, and they don't get their entry until up here, right? So they wanted to get in here. Sorry, they wanted to get in right here, but because of the speed of price, there was slippage, there was high spreads. They ended up getting in, let's say, 56 pips away. That's probably a little bit far, but it's not unheard of, right? It's very common to get 20, 30 pip slippage, okay? So you can see all of a sudden your stop loss went from being 36 pips, jumping up, your entry went up another 30 pips. So you've basically now got, let's say here, an 80 pip stop compared to what should have been a 35 pip stop, right? So you can see how this strategy, it can go wrong, and it can end, the end result can be a big loss. And I think it's risky. I think it's not for me. I think it's close to gambling, I would argue, you know? Too much can go wrong, and sure, more often than not, I think things do go right and it goes positive, but it just takes one bad event to completely ruin your week, maybe your month, right? Where a loss can go from what should have been a 1 hour loss to suddenly a 3-4 hour loss, right? And that can be very damaging to your profit. So I opt not to trade that. And instead, I'm going to show you how I traded news, okay? And this is how I generally trade major news events, okay? So what I do is I prepare in advance for news, and then I trade the news, basically scalping using candlesticks and market structure, okay? So what I knew in advance of this news event is I paid close attention to CPI, okay? I did my research, and I knew that there are basically 3 scenarios that could have happened, right? Scenario number 1, I'm gonna write it out here. Scenario number 1 was high inflation. High inflation, damn it. High inflation equals, and then we're gonna have, mixed, or just, mixed data. And then we've got 3, low inflation, or improved inflation. Okay? Right? So the outcome that we got was improved inflation, right? And I knew that in the instance of improved inflation, we're going to see gold upside. In the event of high inflation, we're going to see gold downside. And with mixed data, we're most likely going to see price range, right? And this, with the mixed data, we're not, this is in the event that say that the reading came out exactly as expected, right? In that instance, it's an improvement, but it's exactly as expected. You might see price range, right? So that is what I mean by that, okay? And the result we got here was CPI year over year came out at 7.7%. That is below the previous reading of 8.2%. And it is also below the forecast, as you can see up here. This is the forecast, 7.9 is the forecast. It came out below that, right? So this was a scenario 3 event. Improved inflation equals gold upside, okay? So now I know that this is the event that's playing out. Improved inflation, gold upside. So as soon as price, now I'm on the 1 minute chart, right? This is how I trade. So I'm on the 1 minute chart. I've been on Forex Factory. I'm looking at the news release, and at 8:30, I know that CPI has come out as an improved figure, 7.7, below forecast, below the previous reading. I'm expecting to see gold push to the upside, okay? Now, the first minute news comes out, we see a huge push, and then a small retracement, right? So that's the first thing. I'm seeing a huge push and a small retracement. So straight away, I'm using this information advantage to then look for buys. And as soon as a support is created at 8:34 a.m., so 4 minutes after the news release, right here, this engulfing candle, it engulfs these 2 candles. It creates a support. I'm looking for price. I'm going to put my stop here. And on the close, as the next candle makes its low, I get in and I put my stop above the high by a couple of pips, right here, right? Just basically 1 or 2 pips. So I go for a 1.7R, right? And as we can see, price does this, right? So I get my entry, we get the engulfing candle, price makes a low, I get in as it's making its low, then price goes up, next candle engulfs, it kind of, there's two candles here where it basically, you know, kind of consolidates at the high. The next candle closes a nice engulfing candle, and then straight to TP for a 1.7 R, right? So I had my stop right here for base, right here at the low at about 35 pips. I had my TP up here for about 60 pips, okay? Now, ultimately, it took out my high, it took out my TP, came back down to break even. So if I tightened my stops and I hadn't hit my TP, I most likely would have gotten taken out. And then, as we can see, basically price continued, okay? It messed around for a bit and then ultimately just continued up, right? So that is how I trade news. I wait for the news release and I have different scenarios. I pre-plan, I'm ready for the news, and as soon as I get the news release, then I'm ready to trade. I'm looking at the 1 minute market structure and the 1 minute candles, and I'm waiting for signals of strength in line with the information advantage I used at news. The other thing that I do is I mark out some key high levels on a higher time frame, such as the 1 hour, 4 hour, and the daily, just so I have a rough idea of where price is headed into and where can I expect a reaction from, okay? If there's a major daily level right where I'm about to take a buy at, you got to be careful, right? So that is another thing to consider. But anyway, those are the two strategies. So strategy number 1 is buy stop, sell stop. And strategy number 2 is wait for the news release and then scalp it using 1 minute market structure and candlesticks. Okay, so that's it for now. If you like this video, if you want to see more content like this, subscribe, hit the like button, and I'm going to put all of my my Instagram, Twitter, and so on in the link in a link in the bio. So yeah, if you could go follow any of those, that'd be much appreciated, and I look forward to seeing you next time.